Claude is the best finance AI on the planet, and this is backed directly by leaderboard results. Val's AI Finance Agent V2 runs 927 expert-reviewed analyst tasks, including filings retrieval, multi-step calculation, and credit and equity work. As of July 2026, Claude Opus 5 sits at the top of that board with 58.63% accuracy. Nothing else beats it. Then somebody took 6 of these models, handed each one $10,000 of real money, and told them to actually trade it. 2 finished in the green, and neither of them was Claude. And the model that won wasn't a Western flagship at all. It was actually a cheap Chinese open-weight model that most of you have never opened once. That gap is the whole video, because the benchmark measures whether an AI can answer a question about a company. It does not measure whether it can make you money. Those turn out to be completely different skills. So today, I'm showing you exactly where the split happens, along with the 3 models that beat Claude at the jobs that you're probably already using it for. First though, let me just establish Claude's win properly, because the rest of this story only works if I'm honest about it. Finance Agent V2 simulates the actual workflow of a junior analyst. Pull the filing, find the line item, run the calculation, then synthesize the answer with the full tool harness attached, including SEC Edgar access, market price data, web search, and a calculator. Claude Opus 5 tops it. Gemini 3.5 Flash is second at 57.86%. And a model most people have genuinely never heard of, Muse Spark 1.1, is third at 57.21%. So, the top of the most serious finance benchmark in public is separated by 1.4 percentage points. And there's a detail buried in the scoring that nobody quotes. Those numbers are partial credit. Under strict all-pass scoring, where the model has to get every component of the task right, Claude Opus 5 falls to 47.71%. Which means the best finance AI in the world gets a junior analyst's task completely correct fewer than half of the times that it tries. And hold that number because it explains everything that happened next. Between October 18th and November 3rd, 2025, a research outfit called NOF1.ai ran something called Alpha Arena. 6 frontier models, $10,000 each, real capital, trading perpetual futures on Hyperliquid, with no human touching the wheel. Every trade, every position, and every line of the model's own reasoning was published on-chain in public. Here's how it finished. Qwen 3 Max, Alibaba's model, finished up 22.3%, roughly $12,200 from $10,000, across 43 trades with a win rate of just 30.2%. Listen to that win rate because it's the most instructive stat in the entire competition. It won by being wrong about 7 out of every 10 trades. It just cut the losers fast and let the winners run, using MACD, RSI, and hard stop losses. And it traded less than anyone else. DeepSeek V3.1 was the only other model to finish positive at up 4.89%, after peaking somewhere north of triple digits mid-competition and giving almost all of it back. Everything else lost money. GPT-5 finished down 62.66%. Gemini 2.5 Pro finished down roughly 40 to 46% after placing something like 238 trades and burning over $1,300 in fees. About 13% of the starting stack spent purely on the privilege of trading. Grok 4 finished down somewhere between 53 and 58%, one of the 2 worst performers in the field. And Claude 4.5 Sonnet? Well, third of 6, which sounds respectable until you notice third of 6 meant losing roughly 40% of the money. Claude did play defensively, with the fewest open positions of the group and the calmest logs. But calm is not the same as profitable, and I'm not going to dress up a 40% drawdown as capital preservation. It was the best of the losers. The benchmark champion, given real money, finished in the red behind 2 open-weight Chinese models that cost a fraction to run. Now, before anyone builds a thesis on this, 17 days is honestly nothing. Critics called it coin flipping with GPUs, and they had a point. The models only got price data, no news, which handicaps a model like Grok that's built around text. Every position was public in real time, so people could front run or fade them. And NOF1 themselves said the early results could be luck rather than edge. But that criticism cuts both ways. If 17 days of live capital is too noisy to prove a model is good, then 927 static analyst questions are nowhere near enough to prove it either. The benchmark isn't measuring the thing that you think it's measuring. So let's go job by job. And the first one is the job that most of you are actually paying Claude to do: reading long documents. On Finance Agent V2, Gemini 3.5 Flash scored 57.86% against Claude Opus 5's 58.63%. That is 99% of the accuracy. Now look at what each one costs you to get there. Claude Opus 5 runs $5 per million input tokens and $25 per million output. Gemini 3.5 Flash is $1.50 in and $9 out. Call it 3x cheaper on the way in, nearly 3x cheaper on the way out. And the newer 3.6 Flash pushes past 300 tokens a second, roughly double the throughput of the model that it replaced. And there's a second cost that people don't see on the pricing page. Opus 5 runs adaptive thinking by default, and thinking tokens bills at the output rate, so the invoice regularly lands above the sticker. Then there's the part that isn't about money at all. Gemini has native Google Finance grounding, with live quotes, ticker history, and valuation metrics wired into the model with no plugin. Claude does not have that. Claude's finance workflow is file upload. PDFs, spreadsheets, HTML, you fetch it, you upload it. Or you build the tooling yourself. Which means on a 200-page annual filing, you're paying the most expensive model in the comparison to solve a problem that a cheaper, faster model already solved with live data attached. That's the first job Claude loses. The second one is the job where being confident and being correct stop overlapping. GPT-5.x has a native Python sandbox. That sounds like a developer feature, but it's actually the single most important financial difference between these models. When GPT runs a calculation in that sandbox, arithmetic gets executed deterministically. Same input, same output every single time. When Claude runs a calculation, it reasons its way to a number in text. And reasoning your way to a number is exactly how you get arithmetic drift compounding across a multi-tab model. Quick honesty note though, because I'd rather flag it than pad the argument here. And that is that there's a set of forensic extraction figures circulating that show a 16-point gap between GPT and Claude on pulling line items out of multi-year filings. I couldn't source that benchmark to any primary document, so I'm not using it as evidence. What I can verify though is Terminal Bench, which measures agentic execution. Scripts, tools, multi-step workflows in a real shell. On the 2.1 revision, GPT 5.6 Sol scores 89.5% against Claude Opus 5's 89.1%. That's a statistical tie. Go back a generation and the gap opens up. GPT 5.5 at 82.7% against Claude Opus 4.8 at 74.6%. Claude Opus 4.6 sitting at 65.4%. So, at the frontier, the gap has basically closed. But the mechanism underneath it is the thing that matters when there's money in the model. One of these architectures computes, the other one narrates. The third job is the one where none of this reasoning even matters, because the only thing that matters is being early. Grok has access to the public X post stream, reportedly around 100 million posts a day. It's retrieved on demand rather than continuously ingested, and results can lag by up to half an hour. But breaking catalyst, sentiment flips, and retail volume surges are reachable from inside the model, instead of waiting on a generic browser call. Claude has no equivalent pipe, and there's no version of Claude that watches sentiment turn. Now, there are numbers floating around Grok's sentiment-driven portfolio tracking, up 19% year to date, up 54% since inception. I want to be very clear about those though, because they are reported, not audited. No mainstream financial outlet has verified them. And Grok is a signal generator, not an execution platform. It lacks the infrastructure for execution, with no native order routing and no way to manage position sizing or stop losses. And in the one test where Grok did have real capital in the market, it finished down more than 50%. Grok's edge is the data pipe, not necessarily the track record. Which brings me to the thing almost nobody selling AI finance tools will say out loud. The highest signal thing I found in all of this research was a widely shared post, reportedly on r/AI trading, titled, "I made Claude my trading analyst, not my trader." The builder describes an architecture where Claude fetches data, organizes indicators, reads the news, and writes the explanation in English. And every single calculation gets routed out to deterministic Python. Not some of them, every single one. Because number hallucination is the failure mode that actually costs money. A similar post on r/Claude AI put it more cleanly than any benchmark can. The workflow is the actual edge, because Claude just reads numbers that are already computed and explains them. And once you know to look for it, the pattern is everywhere in 2026 practitioner reports. Confident citations of IRS publication chapters that don't even exist. Prior year tax rules applied to current filings. Same prompt, different answers on the second run. Compliance refusals firing on legitimate analysis because the model decided your question about a leveraged instrument sounded like financial advice. None of that shows up on a leaderboard. All of it shows up in your account. So here's how I'd actually split the work. Long documents at volume, well, that's Gemini. You're giving up about 3/4 of a percentage point of benchmark accuracy and getting roughly 3x cheaper tokens, double the speed, and live market data with no plumbing. Pulling numbers out of filings and running agentic workflows, well, that's GPT-5.x. Not because it reasons better, but because the Python sandbox means the arithmetic is executed instead of estimated. Reacting to breaking sentiment? Well, that's easy, that's Grok, with your expectations calibrated to what it actually is, a fast pair of eyes on the timeline, not a fund manager. And structured reasoning, framing, memo writing, the thing that you'd hand to a person, well, that's Claude. Still the strongest of the set, and it deserves that leaderboard position. None of them should be doing the arithmetic unsupervised, though. The benchmark was never wrong. It measured analysts' reasoning accurately, and Claude won it. It just was never measuring the job most people are handing these models. And the coda on all of this is worth sitting with, because Quen's edge didn't hold either. Fragmented reporting from mid-January 2026 has Qwen 3 Max down over 21% in a later cycle after a large loss, while the models it beat in October were the ones in front. The real lesson here is that a 17-day winner and a leaderboard champion are both telling you about a moment, not a capability. The real mistake is assuming one model does every job and finding out which job it fails at with your own money already in the trade. Now, if you're running any of these against real capital, tell me which one and what broke first, because that's the dataset none of these benchmarks are collecting. And remember that new models are being brought out and being tested against each other all of the time. So if you want to stay updated with the latest test results, be sure to subscribe to the channel, and I'll see you in the next video. This is Lewis, signing off.